Alright, let's take another look at how we can use Morningstar to analyze a company's financial situation. So you always start up here with the quote box, and let's find a company. So you could enter Home Depot or whatever. I'm going to start with, I'm going to look for JCPenney. And you'll see right here, JCPenney Company, New York Stock Exchange. You always want the one that says New York Stock Exchange or NASDAQ. So JCP, let's take a look. Alright, so their current stock price is $7.58. We could also see what's happened, say, in the last 5 years. And they've had quite a run. It looks like it peaked right after 2011, and it's been on a downward decline ever since then. Let's see if we can figure out why. So we could scroll down. Here's some news and events. Here's their last dividend. You can see looks like they paid 20 cents back in 2012. They haven't paid any dividends since 2012. That doesn't make stockholders very happy. Here's also some key stats. We've talked about that, and we can click on more and find out more information, other statistics as well. And here's a snapshot of their financial information. So this is what we want to zero in on. So we can get a quick summary of what's happening with their revenue and their net income here, and then with their balance sheet right here. But let's go ahead and click on more and do a little deeper investigating, see if we can get some more information. Alright, your information is probably presented ascending, meaning 2010 over to 2014. I'm going to move that back to descending because I prefer the later year closer to the left to the account title. So let's see what's happening to their revenue over the last few years. And the easiest way to do that is just click on the graph, and we can see it's been declining steadily. So we've gone from 17.7 to 17.2 to 12.9, 11.8 in 2014. So JCPenney's been having a really tough time. And you can also see what's happened to their gross profit in that time period. So that's what revenues minus the cost of goods sold, the cost of their merchandise, gives you gross profit. So it really looks like their gross profit is declining significantly. So they have less money to pay their other bills as they come due, less money to pay their salaries, to pay their rent, and pay all of their other obligations. So here's the big problem. You can see the operating income is negative here. And when we get down to net income, let's see what's happened to that. When you go below the zero, that's probably not a very good sign. So it looks like they were profitable up until 2011. They took a small loss in 2012, and then that's been increasing ever since then. So 389 profit to minus 152 to minus 985. So it's getting worse. Their losses are continuing to mount and continuing to grow. So I can see why people who own JCPenney stock are a little bit worried here. We can also flip over to the balance sheet and see what's happening. Probably they have a lot of liabilities as well. That would be my guess, but let's take a quick look. So we can see what goes on your balance sheet is your ALE, your assets, your liabilities, and your equity, your stockholders' equity. So the assets have to equal your liabilities plus stockholders' equity, and we have different kinds of assets. Current assets are those expected to be used or consumed within 1 year. Non-current assets are our long-term assets, things that last longer than 1 year. Property, plant, equipment, furniture, trucks, machinery, all that would fall under this long-term category. So you can see their current assets have been declining. Looks like it rebounded just a little bit in 2014. Their long-term assets seem to be holding fairly steady. Again, some growth there in 2014. I know they've been rebuilding out a lot of their stores. You can also have intangibles. Those are patents, copyrights, trademarks. And then let's look at their liability section here. So we've got current liabilities, those that are due in the upcoming year, and those actually seem to be holding fairly steady over the last few years. How about long-term liabilities? Ooh, they were having a decline, and now it seems to be going up a little bit in 2014. And stockholders' equity has gone down quite a bit, actually, since its peak in 2014. So in your assignment, you're going to be asked to locate information on the income statement and the balance sheet. On the income statement, you're going to be looking at revenue, for the last 3 years, and again looking for trends. So what has happened from 2012 on down to the particular company you're asked to investigate. It's easy to see here, it's been going down. Also going to ask you to look at the cost of revenue, which is the cost of their merchandise, their gross profit. Again, oh, so key for merchandisers and retailers. What's our margin? How much money do we have after we pay for our merchandise that we're selling to pay all of our other expenses and pay ourselves at the same time? The total operating expenses, and then net income. And we'll also, or I will also ask you to take a look at the balance sheet and make some, draw some conclusions there. Figure out what the total assets are for a given year, and the total liabilities, and then stockholders' equity, and what's happened to those over time. Thank you for your time. I hope you find it informative.